Welcome to another episode of Markets Dawn Europe, an audio podcast on financial markets for European-based professionals. A minimalistic solution to the information overload in mainstream and social media. This is what you need to know today.
Morning. It's Monday, 28th of October. Let's cover today's events before reviewing last week's market performance. Japan's ruling Liberal Democratic Party coalition lost the parliamentary majority yesterday for the first time since 2009, in a surprising result that triggered political instability. Voters rejected the incumbent government of Prime Minister Ishiba, mostly on the loss of wages purchasing power, as salary improvement has not matched inflation, and recent scandals. The Constitutional Democratic Party of Japan was the election's biggest winner, adding 50% of its seats in parliament. Smaller parties also added seats, and will prove key in negotiations to form a new government. The yen is dropping 1% today, to a 3-month low of 153.70, while stocks are rallying approximately 2%, following last week's 2.6% decline, and bond yields are little changed, with 10-year JGB yields just 1.5 basis higher, at spot 96%. Other Asian markets are mixed, with stocks in China, Hong Kong and Taiwan a touch weaker, while Korea is firmer by 1%. The other notable event this morning is crude oil's sell-off, with Brent and WTI plunging 4.5%, reversing all of last week's gains, after Tehran downplayed the impact of Israel's retaliation on Saturday. Israel avoided hitting nuclear and oil facilities, and focused on military facilities in its response to Iran's recent airstrike. The geopolitical risk in the Middle East, perceived by traders, came off, following Iran's statement that only limited damage was caused. Brent is now trading at $72.60. Eurozone equity futures are pointing to a strong opening of nearly 0.5%, while US futures are even firmer in overnight trading. Last week's highlights in global markets include a steep bond sell-off, Nasdaq indices reaching a fresh record high, Nvidia briefly becoming the world's largest company, and European corporate earnings disappointing. Bond prices have fallen for 7 straight weeks, with yields on 10-year treasuries adding 16 basis points last week to 4.23% on Friday, and are moving higher this morning, hitting a 3-month high. Bund yields also added 10 basis to 2.29%, while gilts added 18 to 4.24. Traders have become less dovish in recent weeks following the latest data. US stock indices finished in red last week, with the price-weighted Dow Jones Industrials Index losing nearly 3% on the back of falls in IBM, McDonald's and Travelers. The S&P 500 ended 1% lower, while Nasdaq indices finished flat on the week. In Europe, all country benchmarks fell approximately 1% week to date. The auto and parts sector in the Eurozone continues to struggle with Chinese competition at home and China's demand for its vehicles. Autos are this year's worst sector, with a 10% decline after Mercedes-Benz, Porsche and Valeo reported weak results or provided poor outlooks. In IPOs, US clinical stage biotech, Septerna, raised $290 million on Nasdaq at a $970 million valuation and was priced at 18. It rallied 19% on its debut. In credit ratings, Italy's Monte dei Paschi di Siena Bank was upgraded 1 notch by Fitch to BB+. In monetary policy this week, the Bank of Japan meets on Thursday. On the earnings front, Philips NV, Ford and Waste Management will announce today, but it gets busy later in the week, with US megacaps Apple, Microsoft, Alphabet, Amazon and Meta reporting. It's a holiday in New Zealand, Greece, the Czech Republic, and a half trading day in Turkey. Thanks for your time, see you tomorrow.
Visit laconicbriefs.com to subscribe to our newsletter, including this audio podcast with an extended script if you prefer to read, plus performance tables and charts, all in one place. Delivered straight to your inbox every morning, Monday to Friday.